This conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 9:30 a.m., 9:33 a.m. on October 6, 2019. This is a free ACS advanced coaching session for our loyal members, trying to help them as much as possible understand the dynamics of technical charts. Session will be recorded, uploaded to the Google YouTube channel for viewing by all other members and traders who want to benefit and keep on learning, like I keep on doing every single day, on understanding the dynamics and the forecasting abilities, which in turn makes money. That's really what it's all about. And hopefully this is going to be very helpful. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. So what I'm going to do today is, just a very important reminder, the weekly forecasts, which are very critical, as you know, especially in this day and age, is still going to be at 8:30 p.m. tonight. So feel free to join that if you want to understand like what happened, why it happened so correctly, what might happen going forward, so we're more prepared. So this session, Dominic, Jen, who's a little MIA, not sure what's going on, and Serge, I am going to leave it to Q&A. And then I'm going to address, because I want to do it the other way. Instead of me blabbing on, because I understand my charts and all that stuff, I'm going to ask you guys what specifically you want to, what's holding you back, what you want to improve on, and we'll move from there. So I'm going to start, give me 1 second while I try to reach Jen, because I know she actually took
Hi,
the
Frank.
day. Yeah, there you are. Where were you?
Oh, well, I finally got my desktop up and running, and I had to download the meeting thing, but it's not picking up
Okay,
the mic, so I
okay.
dialed in.
Yeah, no, because I got this message from you. It says, "Can you make me the presenter?" You must have clicked some wrong button.
Yeah, probably. Sorry about
Okay,
that.
no problem. Um, just keep in mind that we have the ability here, which we have done that before on GoToMeeting, where you can have access to the mouse and you can actually show things. Okay, this is what I don't understand, whatever. So we certainly can do that. So that's not a problem. All right, so
Okay.
let's Jen is connected. So let's begin. So let's start off with Jen. So Jen,
Yes.
um, like I said, I don't know if you heard me a few seconds ago. I said most of the session I'm going to basically work backwards. In other words, I'm going to ask you guys what you specifically want to improve on. And this is a, like I said, technical analysis is not a one-day thing. It's a constant learning process. And more importantly, you have to understand the basics, important stuff. And the rest of it is, of course, has to deal with the market, the volatility, and all that stuff. So first question goes to you. So uh, pick a chart. Let me just pull up the Twitter feed. So pick a question and ask me.
Okay, so basically, I'm having a hard time with, I'm starting to follow your patterns, and I'm still learning on that, but I'm having a hard time looking at the entry points versus the exit points.
All right, so let's pick a stock. So because I have all the charts here, so let's pick a stock like Google, which
Okay.
worked out and still working. In my opinion, there's a lot of room to move if things go
Right.
right. Okay, so let's pick up Google chart. I am going to attempt to do that through. Give me a second here. Now, the question that you asked, and Serge and Dominic, both of you obviously are listening, is a standard question. And the hardest thing is not the entry. The hardest thing is the exit. All right?
Hmm.
Because what happens in the exit part is number one, let's say you're up a little bit, markets get a little bit tricky, which it always does every 15 minutes, every hour. And the next thing you know, you bail out. So you make a little profit, you bail out. You're not focusing on that swing pattern as to the stochastics turning and all that stuff. And whatever the case may be, the instant fear comes in. Nothing wrong with that. This is the hardest part we need to control. And you're up a bit, and you're like, wow, okay, we made some money. Let's get out. And the next thing you know, that thing takes off. And 9 out of 10 times, it takes off right after you sell it. Okay. Now you always wonder, like, what is that? Are they like watching me? This simple answer. It's called mass psychology. At the time that you're selling for, let's say, 20% profit or 30% profit, and this thing is destined to go up 100% plus, and Google did that. Google options, the 1240s, which are way out there, went from little less than $1 to $2 and change in 1 day, 2 days, or 1 day, I think. So bottom line is that it's a mass psychology, just the way you're thinking. There are maybe 10,000 other retail traders thinking like that. So they're all acting at the same point. So the exit part is very it's not actually very tricky. It is it has to do with massive technical discipline of just holding tight, as long as everything is going. Because remember, and this is the simplicity yet the complexity of these technical markets. Just when you think it's over, the market's going to snap back, like I said, based on, I was screaming how oversold indicators were. I showed you guys the New York McClellan oscillator, my proprietary chart, not the ones on Thinkorswim. And I just knew they were going to bounce the market. And they bounced the market 1,000 points in 2 days. Just the way they dropped the market, 1,200 points in 2 days. So an average person from the outside, okay, you look at this. We haven't even recovered back to where we fell from. So we still have room to move. So, and average person says, what the hell? Like they drop the market, the world's going to end, and then they move the market, the world, as if like everything's all great. Well, nothing's ever going to end and nothing's ever great. And that's the reason why technical charts are such huge money makers for us. And I've become a believer over the years. Now nothing is 100% guaranteed, but that's close to a high probability guarantee you're going to get in trading and investing, not just in trading. I'm just setting up I'm going to pick up Google because that's a prime example, and then we can look at any other chart you'd like. Dominic, Serge, are you guys with us?
Absolutely.
Yes. All right, good. I got a folder here with all these charts, so I'm just filling up that folder. If we didn't have, I'm almost ready. If we didn't have the machines that run the market, every one of my charts at exactly the time that I say it's going to go there would go. I'm telling you right now. But the machines, all they do is they, like I always used to say, they like to take a scenic detour. Scare the living daylights like you're going to fall over the cliff. But you're going to get there. You're going to get to that destination. But in between, it's going to twist and turn to the point where it's just going to make you crazy. And that's what these volatility programs are all about. Very unfair, but hey, that's the market. No one said it's fair. You know, they run the program just for the hell of it sometimes. Seriously. And then the CNBC comes on and end of the world doomsday, and Fox News, you know, comes on and end of the world doomsday, and all kinds of financial networks, and everyone's just freaks out. Okay, not to say that the markets can't fall another 600 points at the start of Monday. I don't want that, but that's just the way it is. Let's pull up another chart and keep it in the background. Where is the 1 hour? Here. All right, let's try to find the Google chart. There's so many charts. Hold on. Name, sort by
Maybe
group.
use the filter.
Yeah, I'm just see, you probably know better. Just type in here, Mean.
Yeah.
See, I'm learning. Yeah, the thing is, like when I do the filter, it's not giving me the date. I mean, we've traded Google, so I'm going to just do it by group by date modified. Last week, last month. This should do it. Should this do it? What is this? Apologize for this. Let me just go back to the regular stuff. I'll just do by date modified. So 10/4 was the last time. That was Friday. And we'll group by name. And that should do it for us. Wow. Imagine creating so many charts for you guys. Whoa. Just like a visual history of the US stock markets. Okay, here we are. Oh, this is way too much. All right, now I'm going to do it this way. I apologize for this. I should be more prepared. I'm going to sort by date modified, and A to H doesn't do it. I will do it group by. So we're just going to stick to this. It's right here. So let's talk about. All right, Jen, is Google something that are you in? Were you in it? Like I want to deal with something that you had your money in. So
Yeah,
what
I was in it, but I got out way too early.
exactly? Just exactly what I said
Yeah.
before even knowing your thing. Exactly.
Yeah.
All right. So I am going to not bother. No, I will bother. Here it's the same thing. I'm going to pull up one of the screens. Remember one thing. Most people get out too early. You may. Oh, come on. What is wrong with machines today? Now I can't get the top of this. I can't drag this down. Great. Okay. All right, that's good enough. So here's a 1 hour chart of Google. This is the chart that I showed you guys as a swing trade, correct? And what I did was I looked at this. This is very easy to understand. And this is what I'm concentrating on. And this applies to all charts, especially these big companies. Now keep in mind that stocks like Google and Amazon, these are, from a price standpoint, these are expensive stocks from a price standpoint, not valuation. So Amazon is a $1,700 stock, $1,745. Apple is $227. So when you're buying options, you have to keep in mind, as I'm putting out this thing, that these are not going to just, when they start moving, they're not moving in $1, $2 increments. When they start moving, they're moving in increments of $10 to $15. You guys understand that?
Yes.
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 Right. And that's the reason why I look at the charts and I look to see whether am I going to buy in the money? If I buy in the money, that means I'm paying a lot for each contract. So I look to see that if it's moving as the momentum picks up on the upside, and that's my job to figure out that's going to happen and to show you guys, and you guys have to understand it and do whatever you need to do with it and stick with it. Then I buy $10, $20 out because they're 4-digit stocks. Google is a $1,200 stock. Booking.com, which is Priceline, is a $1,980 stock. And this is a very simple concept that a lot of options traders don't understand. This is not like buying a stock that's at 5, like a GME, that we are expecting to go to 7, where you're buying 16-cent calls, which go to 23. It's the same thing as buying a $16 call going to 23. So you have to understand this concept. So the characteristics of each of these type of large movers, the $1,400, $1,500, $1,700, $1,800 stock, is that they will tend to move when they go into a direction. Just like a heavy object, they tend to start really picking up steam. There's a lot of stuff behind it, so I don't want to spend the next 2 hours explaining that. But the people who are buying Google and Amazon and Booking.com and these $1,700, $1,800 stocks, do you think it's us? I just want a straight answer. I want to understand that I want to train your mind. I
think it's institutions.
That's right. Average person, if you wanted to buy one share of Google, you'd have to pay $1,200. So if the stock moves up $50, your options are going to go ballistic. But how much are you going to make on the stock if you own one share? How much are you going to make on the stock if you own one share of Google and it goes up $50, which is a substantial move? I'm asking Jen a question. You guys have to understand this. This is
so you just make $50.
Yeah. Does that excite you? If you put $1,200 in something and you take $50, is that worth the return? No,
absolutely not.
Exactly. So what you have to understand, as Dominic pointed out, that's a return of $50. 50 divided by 1,200 is basically a move of 4%. 4% doesn't excite traders. Okay. So bottom line is institutions buy it. So institutions, when they operate in these Googles and Amazons, these $1,000+ stocks, they are patient buyers. So when they start coming in, it's like the big elephant starting to walk across the plains. You see the footsteps. And those are the footsteps that I show on my charts. Come on, stop jumping around. I'm talking to the machine, the freaking computer. It's very jumpy today. So, and this is the simplest thing you have to understand. Here is an uptrend line, which I'm going to and when institutions buy a stock, generally they're accumulating a position. You've heard that term. They use all kinds of different methods. One is called, VWAP, value weighted average price, which they follow. Sometimes they just keep on buying it and the stock's like stuck up maybe $2 or $3, $4. And then all of a sudden at the end of the day, you've guys seen this repeatedly, boom, it goes up $8, $9, $10. Because institutions, generally speaking, accumulating during the day, and at the end of the day, they put in their large orders, both on the sell side and the buy side. And here we're talking about the buy side. So you need to be in there. And as I'm going to explain this chart, this one chart alone will explain a lot of stuff. So patient like them. So with the same thing with options. Now, here is the difficulty with options. If you buy options which are $20, $40 higher, where I think Google's going to go, and Google's already going there, okay? Because I told you guys to buy Google on this reversal candle when the stock was around 1170. The stock closed at 1211. How many points is that? That's $41. $41 in 2 days. In fact, I told you guys to buy at not exactly at the bottom, but let's say around here. It's up $40 to $50. It was at 1163 for a split second before it turned, before the market turned at 10 a.m. on what day did the market turn on 10 a.m. on the 3rd, which was Thursday. fast markets. And I try to keep you guys as posted as possible. So market turn, Google turn. So it's up 1160 roughly, 1160 to 1210. So it's up $50 in 2 days. And at this point, from a technical standpoint, no signs of abating. So the point is, with options, we bought here. I said buy 1220 and 1240 calls. Okay. And those were a little bit out of the money. So so the options did nothing. On the first day, yeah, it went up a little bit. The second day, which was Friday, where the real buyers came in, this is what the shorts covered. These hedge fund shorts, automated quant programs. Then the second day, the real buyers stepped in, institutions. And that's when the options started to really move. Now, the further they out, $20, $40 out, right? Then obviously they're going to move a little bit slower. But as the stock approaches that approaches the 1220 level, you're going to see a rapid acceleration on the premium or price intrinsic value of that option. Do you all understand what I just said? If you don't, tell me, because you got to understand this simple concept.
I do.
I do as well.
I'm not sure, Frank.
Okay. I'm going to get the board here. Glad that you mentioned that. Hold on. Because it has to be written down while the chart is in gear. All right, you ready, Serge?
Yep.
Okay. So we're talking about Google, and this doesn't just apply to Google, but applies to all stocks, but certainly this category of stock. So when the stock was down here around 1170, I said buy, as far as I remember, yeah, 1220, 1240 calls. Now, from 1170 to 1220, the stock has to move $50.
Yeah.
And here it has to move $70. So I expected the market, based on everything that I talked about that day, to have a ferocious reflex rally, which is still in progress. So what I'm saying is these options were roughly, they were actually lower than $1 at one point. So they were roughly around 1 average cost, okay? So what I'm saying is the options won't do much. Maybe they will go to $1.20 as the stock is approaching 1200, because the strike price is 1220 to 1240. What I'm saying is the speed of movement of these options will dramatically increase, big arrow, as the stock is approaching 1220, 1230, and the stock closed at 1220. I believe Google closed at, well, the high for Friday was 1212. What I'm saying, Serge, is you won't see much movement on these options because they are so far out of the money in the first stage of the move. Even though the stock will be up 30, you're like, wow, why is my option not 3 times more? That's because you have a lot of distance between moving here, 1200, and to where the strike price is, which is 1220, right around here. So what I'm saying is once it crosses over 1200, you're going to see these options move very fast, very quick. Not over 1200, over, or more like around 1210, which it closed above. So what I'm saying is on the first part of the move, even though the stock has made a big move, you're not going to see much action. But as it's approaching the strike prices, going towards it, you're going to see these options at that point, those options went to 220. You're going to see them start to really move fast. They'll go to $1.60, they'll go to 2, and then they closed at 2. The high was for the day was 220. They closed at 2. Now, if Google pops up on Monday, another $10, the markets have a strong open, which I think they will. I think the overseas markets are going to like what they saw in the US markets on Friday. There's normally a overflow effect. So if Google opens up 10, these things are going to be at 3. And
Is
if
it
it keeps
because
on,
of the delta?
yeah, because of the options characteristics, delta, gamma, implied volatility. But forget about the fancy terms. Think about it in a simple way. Yes, exactly. Everything has their underlying characteristics, and options have 3 characteristics. Delta, they also have theta, which is decay. They tend to fall in value if the price is not moving much. But generally speaking, I look at it like a rubber band. Well, the rubber band, you're pushing up a little bit, doesn't matter. And you push it up, you pull it, and then you can feel the tense. All I'm saying is in a simple way. As it's approaching the strike prices, the speed the options are going to go higher dramatically goes higher. Do you understand what I just said?
Yeah.
Exactly. So now what I'm explaining to you is when you buy something way out of the money. If I had said buy 1180 calls, and the stocks, I recommend the stock when it was around 1170. So if I said buy 1180 or 1190, which I've done many times, then you have to your options wouldn't be $1. They would probably be like $6 because you have to pay a lot more price because it's close to the money. You understand what I just said?
Yes.
Yeah. These are the simplest concepts because by now all of you guys should have that in the back of the head. It's like getting into a car. You don't think it's just normal procedure. You start the ignition and put the car on drive and you hit the gas to move. So these are the simplest things. So it should be automatic. So instead of buying expensive options, now somebody said, why didn't you buy the 1180, 1190? Because I was wary about the markets. Yes, I love the hammer reversal. But with all the volatility in the market, I said, let me bet small. Because if I'm right, then that small will become big. And that is exactly the picture. So, all right. So you understood that. Jenny, understand what I'm talking about? Dominic, understand. You guys do understand. You're not just saying yes, right?
No, I do.
Okay, good. Jen?
Yeah, I got it, Frank.
Okay. Now, because there's a lot of stuff with options analysis, and I've always said I'm great at market forecasting and stock direction and stuff. I'm not one of those options geeks. There's a lot of those guys. They live in a world of complete options strategies and blah blah blah. I can't do that. I don't want my brain cells to be analyzing the characteristics and all the different complex strategies of options and stuff. That's not my business. I just want to make money as long as I have the directional bet right. So, but there's a lot of great material on YouTube. So feel free to, if you really want to understand like Serge said, the delta, the gammas, the implied volatilities. I just look at it very simply. What's implied volatility? What's the beta? In other words, is it a fast moving stock? Is it a slow moving stock? And I go with it. So let's move this out and look at the chart as to why you don't need to bail out. And it's fine if you bailed out. You can always get it. So the things that we are watching here, and I'm going to ask you because I don't want to keep on giving the answers. This is one thing with these ACS sessions. I want to see what you understand. Because I give the answers, what's the point? So when I put this chart out with a lot of markers and stuff, and I'm looking up my Google chart, what is the first thing that, what when I tell people to buy it, I put a lot of arrows and stuff, and I'm pulling up the chart. What goes on through your head, Jen? Because this was your question. So I want to understand what you understand.
What goes through my head? That's a lot of lines is what goes through my head.
What? There's a what? I didn't. Okay.
I said that
let
it's a lot
let
of
me
lines.
let me. Okay. There's a lot of lines. This is the chart I put out there to buy Google.
Uh-huh.
Right.
Yes.
Now, first of all, there's always going to be a lot of lines. As long as those
Yeah.
lines are not going up your nose, you're fine. Okay. It's just a joke. It's just a joke. All right. As long as those lines are making you money, yeah, you're fine. So look at this chart and tell me what you didn't understand, and then I'll explain to you. And I told this is what I said. Okay, buy Google, this and that.
Mhm.
What do you see in this chart with the arrows? So come on, let's make good use of time here. Are you at a desktop?
True print. Yes, I can
Okay,
see it very clearly.
okay. So I'm giving everybody access to your mouse. Move your mouse over the screen.
Okay.
Perfect. Now tell me what you see.
Okay, I see these two white lines here, the channel. It's like a ascending triangle.
Amazing. Yes, fantastic. Yeah.
Yeah?
So this
Okay,
white
so
line.
that's the first thing that popped
Put
up.
your arrow over this white line.
Yes.
Okay. That's a significant what?
That's a significant support line.
No. That's a significant uptrend line.
Oh, uptrend line. Okay, yes.
Show me a support
Yes.
line. Remember,
This
it's
should
very
be a
simple.
support line
Support lines
here.
are always in red. That's
Yes.
right.
Right
That's
here.
it's a significant support, right? There are two lines I put
Yes.
to emphasize how powerful that support is. Now, why did I put just to add on? And you're doing great. Add on. Why did I put two support lines? Let me take control of the mouse for a second, because this was back on August 5th, right? That's by the way, between July 29th and August 5th, the markets plummeted, similar to what happened here. I mean, it was like a full scale 1,500 point, 2,000 point drop. So it's a significant support. That's what the stock turned, see, and went up 70 points or something like that. So that one thing. Second thing, the same stuff happened on August 20th. So that's a major support. On top of that, that's a gap fill. See? This is what the stock rose like a monster. Remember why? We played it. Earnings. Their earnings were better than expected. That was back in July. And the stock went up 120 points overnight. And I believe Google's going to do the same thing this time. That's just my opinion. That's a 120 point move on earnings. Now that's the past, but it created a massive gap. See that? Yes or no?
Yes, I see it.
Right. So that's why it's support. So let's continue. I don't want to break your chain of thought. So you still have control on the mouse. Can you move it? So show me the support lines again.
So you got both of these in the red?
That's correct. Don't answer a question. Don't answer a question with hesitation. Yes. Be firm.
Yes.
That's a major support.
Yes, sir.
And show me the uptrend line again.
Right here, the white?
What are you talking about? Yeah.
I'm sorry, this one right here. Yes.
Yeah. Uptrend line simply means something that's coming from bottom up. Show me and because you see what you did with your answer, which was terrific. You gave the big picture, technical A+ answer before fully dissecting the details. You said ascending triangle. It's a massive ascending triangle. And if God help us, if the ascending triangle breaks out, where is the stock going to go?
Up here. Well, past this, actually.
Past that. Exactly. That's what like the ascending triangle can take Google to $1,300.
Right.
That's a lot. Okay. That's $100 from here. Is it possible for Google to go up $100 from here? It just went up $70 within the past couple of days, 2 days, right? So why can't it go up $100 more? So that's what I'm saying. Okay. Now show me the downtrend lines.
The downtrend line?
Correct. downtrend lines. Very simple. Don't make this difficult. You showed me the uptrend line in white. Where are the downtrend lines?
Yeah.
Huh?
Well, obviously it has to be below.
Excuse me. Let me ask you a question here. It's
Sure.
already there staring at you. So don't have to reinvent this. The chart is already there. I have 3 downtrend lines giving you the answer. Drawn already.
Oh, these are here?
Exactly. These
Yes.
are downtrend lines. They go from
Yes.
top to bottom. So there are 3 downtrend lines that I did my expert work, and already you guys know what the downtrend lines are. Show me the first downtrend line.
Could be this one.
Correct. And move the arrow down the downtrend line. And when did it break out of that downtrend line? Focus on the candle. When did it break out of the downtrend line? Roughly. Look at the date at the bottom.
What is that? Like 9-1?
Correct.
Or
Somewhere around
9-2
9.2.
roughly?
Yeah.
Yeah.
That's it, the first. Yeah. So that's the day it broke out of the first downtrend line. Correct?
Yes. Yes.
Okay. Show me the second downtrend line. And once it broke out, what did it do? It went from roughly what? What was the price around that time?
So it was about
Move the arrow to the right.
1173.
Yeah, don't have to be
Or that's where
specific.
yeah.
It's like somewhere
Okay.
around 1160 to 1170, right?
Okay. Yes.
Isn't it amazing that it exactly went there on Thursday morning when the market first plummeted? So that's, you see
Yeah.
the level that it's bouncing off?
Yes.
You don't have to see. What's that? Show me a big yellow arrow. I said, buy the frigging daylight out of Google. Where is that first yellow arrow? Thank you. It's a hammer reversal, which is very powerful formation. That means billions of dollars just went in, whether it's a short squeeze where shorts have to cover, aka buy their short positions, take their profits off the table, or dumb shorts losing money, just, oh my God, I gotta buy back the stock or else I'm gonna lose money. It's not going down anymore. So the arrow's there to show you. So it's easy on the eye. Show me the second downtrend line. Roughly when did that break out?
About 1186. Oh, I'm sorry. No, I'm sorry. I just went through that broke out about.
Wrong. Go back to the
No.
left. Go back to the left. On that same downtrend line, just follow the arrow to the left. You're doing the wrong thing. If you're driving right now, you've already crashed. Just show me the second downtrend line.
Right here.
Perfect. Where did it break out? Where did the second downtrend line, where did the breakout happen? Keep on going left, Jen. There. Simple. Right.
Oh, yeah.
What date was that roughly? That was around the 10th of September. If
Right.
you look down. Okay. So where is the third downtrend line? Correct. And that has not broken out yet. Keep on going to the right. There was a lot of movement back and forth, which day traders love. Day traders love or hate, where the stock moves up and down big, like 20, 30 points, and that's at the 1240 level. The white line on top of that you correctly call the top of the ascending triangle is a major what?
Major resistance?
Correct. Where is the second major resistance? Like a really big one.
Right above it.
Right, which was the high for the stock on the day that it literally decimated the short hedge funds when they came up with great numbers. And that was, I believe, somewhere at it shows on my other screen that the high for Google year high was 1296. But I believe, yeah, it was somewhere around there, 1270, 1280. So you got 3 downtrend lines. You got to look at the pattern symmetry. So, and I put the second arrow here. See that?
Yes.
Now, why did I put the second arrow here? And I'm not looking for right answers. I'm just looking for what you understand. And I'm going to explain it.
Because you,
Like, I think logically. You're a very logical person. You're a very logical profession. You're a doctor. You're a nurse. You know, think about it logically. Why did I put that second arrow there? First arrow was a buy arrow. Understood.
Mm-hmm.
Put your mouse on the second arrow. Correct. Why did I put it there? Because I never randomly put anything. There has to be a reasoning behind it. Why did I put it there?
I'm not sure, Frank.
Okay, I put it there because it's a big fat uptrend line,
Mm-hmm.
which is a significant uptrend line, right? Which we already have established. And that uptrend line is where the stock initially will go in order, given market circumstances. We're bullish on Google and the market is cooperating. And I kept on saying all through the day, all three of you should remember, I kept on pushing the QQQ. I kept on writing 2 or 3 times. I said strongest sector, the tech sector. You remember that, Dominic, Serge?
I do.
Exactly, because I started to see money flows in that sector like no one's business. And it was started off because Apple kept on jumping like no one's business because their iPhone production sales supposedly are going higher. I mean, they told the factories overseas to manufacture more iPhone 11s. So it pushed up the whole tech sector. And then came the great jobs report and everything. So I kept on saying tech sector. So focus on the tech side. Not that other stocks don't go up, but so bottom line is that's where I put the arrow. Because it is where the uptrend line intersects. You understand that, Jen?
Got it. I do now.
Okay.
Frank, could I ask a question?
Yeah, go ahead.
That uptrend line you have,
And by the way, you can move your mouse too over this thing. So
I can?
yeah, I gave access to everybody. No, or did I share mouse with everyone? Yeah. See
I
if
don't
you
know
can
if I
use
can.
the mouse.
I'm trying to move it, but I don't think it's doing it.
Really?
Yeah.
Because I just said.
I'm on my.
Oh, that's why you don't show up under everyone because on the mouse side because you're on your iPad.
Yeah, I'm on my pad.
Okay, go ahead with your question.
So that white line you have, the ascending, doesn't that intersect where the 30 and 50 is as well?
You answered what I was going to say next. Exactly. So that is the second point that I was going to make. Is that not only is it where the uptrend line is, this is called a very positive, high probability, using a fancy word, confluence. You guys understand what confluence means? Confluence means when a couple of factors all meet together. Like they say confluence of factors, like they're all kind of shaping up. So this is a major technical confluence zone where the 50, the 34 and the 50-day moving average, which Dominic already identified, and this is coming after it broke out of downtrend line number 2. Understand what I'm saying, Jen?
Yes.
And Serge, stop me anytime, or any of you. So this is, we broke out of the second, and I already predicted what was going to happen because of different internal factors and stuff. Well, that's my job to do that. You guys have to basically understand it and go with it. So given all the factors, this is a very powerful formation. We'll talk about the internals in a second on the actual chart, not just this one. So the bottom line is, let's focus on very clear. You can look at this on your iPhone. You can look at this on your iPad, on your desktop, but something, on all screens, this chart shows up very clearly. So bottom line is 34, 50-day moving average, despite all this volatility. Jen, question to you.
Mm-hmm.
What is the general trajectory or direction, and use your mouse, of the 34 and the 50-day moving average? Show me where they are. Those are very important lines, right?
I'm guessing here, yeah, but I can't tell what your colors are.
Oh, okay, so that's orange.
Okay,
that's
so orange is what, your 34?
Orange is always 34, correct?
Okay.
And
so
where
it's
is
right here?
Yeah, where is the red line?
Right below it?
Correct. So that's the 50.
Yeah.
Always, that's what I use primarily. And remember, the 34 and the 50 primarily used for swing trades. where we have to be disciplined enough to hold it, as long as the
Okay.
general direction is telling us it's okay. It doesn't matter what happens every 15 minutes. It doesn't matter what happens every hour. What is the general direction? And are the candles from where I said buy heading towards that? I knew intrinsically, based on market factors, that Google and the stock market were going to go towards the 50-day moving average. So if that's the case, why wouldn't I buy and hold it? Now, it doesn't matter if you took some profits, you can still get in. So what is the candles doing right now?
The candles are moving towards actually, it's a little bit past it already.
Not a little bit, it's past about, it's moving real
Well, yeah,
fast.
quite a
over that.
bit.
Yeah, you're right. It's a little bit.
Yeah.
I'll take that. When it's so.
Okay.
Bottom line is exactly, and it is attempting to go above the orange
Above it.
line, which is the 34-day moving average. Now, once it does that, the stock lands up doing what? Let's say we get another candle the size of this, which is Google
Mhm.
up how much? Like, let's say another $15, something like that. What will be a technical success? What's the next battle Google is trying to do, which is going to make your options triple? Go ahead, think about it and answer. Right or wrong, I don't care. Answer. Let's say we get
Meaning
another
what?
green. Let's say we get another green candle. Where does Google
Okay.
land up? I'm not asking for the price. I'm asking, yeah.
Past our trend line here.
So why don't you draw a circle there? Yeah. So what has it done? And a lot of the times I write that down for everybody. So what has it accomplished? What is a major accomplishment if it goes to that circle zone that you are saying, that you just drew?
Oh, it broke through.
That's not a good enough answer. What do you mean goes through? It
No, I said
has.
it broke through. Uh-huh.
I'm sorry. It does what? I'm getting a lot of feedback. Somebody mute their mic. Probably Dominic's. Yeah. Yeah. Go ahead. What? As you correctly pointed out, if it gets here,
Mhm.
what is a major technical? Why is it technically so bullish? It's common sense. Think and answer. Give me a wrong answer. I don't care, because I don't want to sit here in silence.
I can't
I have
answer.
no idea.
No, 1 second, sir. I know you don't answer. This is not a favorite teacher's pet situation. I just try to explain it. You should have an idea. I just walked you through the ABCs. This white line is a significant, going back to July of this year, significant uptrend line, correct?
Yes.
Okay, so if it lands up in this zone, what has it done?
It's broken the trend line.
It has recaptured the uptrend line.
Okay.
Yes, it has broken the uptrend line to the upside.
Mhm.
It has re-entered. It has re-entered its multi-month uptrend. Do you understand?
Yes.
This is so significant. This is how you get rich. If a stock like Google has reclaimed this multi-month uptrend as it pushes up, and once it hits this, which is another maybe 5, 6, 7 points, it's going to find resistance, because an uptrend line becomes resistance if you're below it, correct?
Mhm.
Once it tries to, and I'm betting that it basically enters that uptrend line, which is this. It is a significant technical milestone. Do you understand?
Yes.
Don't say yes with a hesitation. Say, yes, I understand.
No, I understand.
No, I understand. You know what a psychologist
No.
is saying? You just planted the seeds of doubt in your head. This is how you answer. Yes, I understand. And if you don't understand, I'll teach you. Remember, this video is a lot of people are going to see it, and they're going to love it, because these great questions that you're asking as a complete rookie, who's a very smart rookie, by the way, are just very simple stuff that some people get stumped on. And I don't understand why, but hey, my job is to try to explain as much as possible. So yes, if Google enters over that, it has significantly broken at that point over the 34 and 50-day moving average and has entered that zone where the shorts who might be still shorting say, whoa, hold on a minute here. This is getting a little bit nasty. Remember, shorts, it gets very nasty for shorts when stocks get into a major uptrend, correct?
Correct.
So, but at this zone, keep in mind, there's going to be some back and filling, because when you break a major downtrend, uptrend line, which it did 2 days ago when everybody panicked on the ISM numbers, I told people not to panic. What was the caption on my video with Kermit the Frog saying panic? What did I write next to it? Nah. And that nah was 12,000 point reflex bounce. Okay, so bottom line is, yes, so that's significant. What's the, if technically speaking the stock makes a surge, where is the next level? It's staring at you, it's marked. Tell me. And don't just make up stories, focus.
Pointing at it here.
Wrong. I said, like I always tell people, trade with your eyes open. Forget your brains. Trade with your eyes open. I have it marked. Where is the price? Why is it so difficult for you to see it?
Because I'm not thinking.
If you think that your visual, when you see, because you're not thinking, then I will recommend you to another doctor, Jen, and you're a doctor yourself. I'm dead serious. It is marked, I said.
Yes, it's 1240.
Thank you. So why does it take so long? I'm not going to even bother why it's going to take so long. So yes, I marked it for people that if the stock does these candles, okay, the next level where the downtrend line is actually a little bit higher, is 1240. I marked it. So brings me to the last question. Yes, you can take profits along the way, but why would you bail out of a stock which is doing all these things that we just spoke about? End of story. Dom, you. Sorry. Jen, go ahead. Is it clear as daylight, at least for now, and stop this negative thought process that you keep on pushing into yourself? Okay, no, I understand. Like, you're already demolishing your thought process. Yes, you understand. And if you don't, ask me, and then I'm going to give the platform to Dominic. Do you understand?
I understand. It's very clear now. It's
right. And as we go through and ask more questions, but this is the reason why you don't want to be completely out of it. So even if you get out of it, you want to get back into it, which I did. Right. I got 100% plus on my thing. I pulled off a little bit just to see how the market reaction would be, not just on Google overall. Saw the market very strong, got back into half my position right before the close. So my cost basis right now is around 2. Before, my cost basis was 1, slightly lower. You understand what I'm saying? So I took my profits, close to around 2, and then re-entered back at the end of the day. Dominic, Netflix, correct?
Absolutely. Because Lord knows I sold way too early.
Okay. Netflix is a very volatile stock, but hey, every stock is volatile. It's like, who the hell, that's not what we're here for. All right, let's look for the Netflix chart. Always keep in mind, as I'm pulling up the charts here, Netflix is seriously, excuse my French, like a wild, it's like a sexy chart. If this works, it's going to be like sick. All right? This is the bigger picture we're talking about, the big picture, not the small back and forth, blah, blah, blah. So there's a bunch of things happening here. So first of all, Dominic, I'm going to put you in the same seat as Dr. Jen here. And no, seriously, what is the first thing that catches your eye? This is the big picture going back to November of 2018, almost a year ago. This is a yearly chart of Netflix. It doesn't matter what Kramer says, because he was dead wrong. He's like, oh, Netflix should be out of FANG. Oh, okay, great. And the stock goes up $20, right? So forget all that. So what's the first thing that you see here?
Big downtrend lines.
Okay, those two patterns are downtrend lines, but they're called what? And I did write it many times.
Descending?
Don't just make up stories.
Falling wedge.
Yeah, thank you. You got to read. You got to read. You don't have to even guess because I even write it down. They're big macro falling wedges. Why do I use the macro? Because they span large timelines, months. Got it?
I got it.
But you're right. They are downtrend lines. But there's a pattern. So what you, generally speaking, from a technical perspective, given the right favorable circumstances, and Netflix's earnings is the first major tech earning coming out. I believe October 16th. So they're the first ones to report. And the analysts are already pissing on it. Like, oh, Netflix, they don't know how to grow. They don't know how to make movies. They don't know this. They don't know that. Reed Hastings, who's a multi-billionaire from nothing, is an idiot. You got to fix your mic a little bit. Way too much feedback. And Dominic, you need to get a basic headphone. It costs about $20. Just get a basic headphone that'll help you with all these webinars and stuff. So, because otherwise, it's crazy with the small ones.
Is that better? I lowered it.
Yeah, much better. So,
There's somebody blowing leaves outside.
Oh, okay, I get it. All right, so let me ask you this question here. So these are big macro falling wedge. What's the next thing that you see? Oh, macro falling wedges. Generally, if you look at the first one, and I want you to take control. Oh, you can take control of the mouse. So do I have pen color? This, you see how similar these patterns are?
I do.
There are significant drop downs. You know, they're from 385, 386, let's call it 390, all the way down into the 240, 250 range, right? 230, 250 range. Very similar. Hasn't reached the bottom yet. The bottom, the significant bottom. If, let's say, for example, Netflix completely they miss their numbers in a big way, then the stock will find a significant bottom at 230. And if it breaks that, then the stock's going below 200. But that's not what we're looking at. We're looking at this here. So the last time when the rest of the world, all the talking heads and all the idiots who are always wrong, kept on pissing on Netflix, that was back on during the crash period right before Christmas, right? So what happened? What happened? Macro falling wedges, by looking at this pattern number one, pattern number two, which are almost identical. Which this one it has a little bit of a downside cushion here, but let's say it doesn't quite get there. What does it do? What do macro?
It broke above.
Okay, that's not the type of answer you want to give as a trader. It breaks out. Simple. It doesn't break above and stuff like that. It breaks out. A macro falling wedge breaks out to the upside. Okay, so if that's the case, based on previous pattern symmetry, knowing nothing what they're going to report numbers and stuff, what else do you see on the chart? Look on the right hand side right now. The first part.
Yeah, I see it's about to break out by 273.90.
Right, which is the top of the downtrend line or top
line,
of
yes.
the rising wedge. What is the next? Why do I have an arrow? So what's the next price target?
304.36.
Wow, you really
I'm
jumped,
sorry.
right? No.
284.75.
Yes, and what is that line?
That's right above the.
I didn't ask you that. Why is that line significant?
I don't know.
You do know. What color is that line?
I'm trying to. Oh, it's right. It's the moving average, the 50.
Don't make up stories. Orange lines are never 50. Orange line, write this down somewhere because this is the standard procedure I use. I don't make up things, okay? Don't just guess. Orange lines, write it down somewhere. Is the 34-day moving average. Okay, so the orange line is always the standard 34-day moving average on my charts. So what color is the 50-day moving average always on my charts?
It looks red.
It is red. Doesn't just look red. Exactly. So the red is always, this is the 34-day SMA. That's how I put, right? Simple moving average. And the red is the 50-day moving average. So where is the first price target?
At the 30.
Hello?
At the 34. Sorry, my phone was ringing.
No problem. So, and what price is that?
284.75.
Correct. So if it breaks out of the if it breaks out over 280, that's about $5 from here, then it'll attempt to kiss these downtrending. Remember, they're still downtrending. 34-day, 285. Forget the 75. That's 34-day moving average. Understood? Jen,
Yes.
Serge knows, you know. Okay. So
Yes.
the red one is the 50-day moving average. So that is at 294. So right from here to here, and it ain't going to be just like, oh, every 10 minutes it's going to do that. But from right to here, the stock closed at 274, right? Yes.
Yes. Yes.
And so if it goes to 294, that's 20 points. Just to kiss the back end, just to kiss the hiney, as we say in New York, of the 50-day moving average. Now, if the stock is really in a downtrend, what will happen at the 50-day moving average?
What will happen to the stock?
Yes,
We'll go below it.
it's already below it. But let's say it actually manages to squeak up to the 50-day moving average. What generally will be the first reaction of the stock?
Go up.
Bullshit, go down. Because the 50-day moving average is sloping down like the Niagara waterfall. So
Okay.
if that's the case, just like I showed on the SPY, the SPX, and all the markets, that generally when it hits the 50-day moving average, there's a lot of selling that goes on there. And then you might be right. It busts a move over the 50-day moving average, like Google has done, like many other stocks have done, and that becomes that's where the next stage of buyers come in. There's a lot of old-fashioned fund managers still don't understand the friggin' chart, and they're managing billions of dollars. I'm dead serious. Okay, so the old saying, stocks that break below the 50 don't touch zone. Stocks that go above the 50-day moving average, they start piling in. You understand?
I do.
What these charts that I draw are so freaking precise, showing you the support level. What is the significant support at this point on Netflix?
251.
Correct. The red line. It breaks 251. Feel free to short Netflix. Now, it is still within that falling wedge. We already have now established that once it breaks over that 275, 276 level, not even 280, the stock will head towards the 34-day moving average, correct?
Yes.
It's a lot of points. That's a lot of money in your pocket. So it doesn't matter whether you got out too early or not. The stock, you know now what to do. Now, once, let's say, I have lines drawn all the way to the top. What is the next significant resistance line? I already have it marked.
304.
Correct. What is the one above that?
That's the 320, but I don't know what that white line.
That
can't
white
see.
line is where the stock sold off hard. That's 316.45. Got it?
Okay.
Yeah. And then you have the final destination. If all goes right with Netflix, like their subscriber numbers are higher, their costs of production are lower, they don't have to, they don't have to worry about their big, Netflix finances all their movies, billions of dollars. So their debt situation is under control. The stock will go to where? I already marked it.
If I didn't hear the question.
I said if everything goes right on their earnings, where do you think the stock can go to?
Up towards
I already have
380.
Listen, that's called massive euphoria in your head. Remember, greed
Yeah.
kills. Yeah, greed kills, all right? I'm a very bullish guy. I never, I don't do that crap like, oh, it's all going to the moon. And sometimes I've been wrong. It actually has gone to the moon. No, wrong answer. I already have it marked, I said. Go ahead.
You said if everything goes right.
Yes, if everything goes right. This is not a trick question, my friend, okay? If everything goes right, where do you think the stock can go to? I already have it marked.
337.
Thank you. Exactly. Somewhere around here. Now, why is 337 important? What color is the line?
Red.
This is not red. I think you're colorblind. Red is this, which is the 50-day moving average.
That's purple.
Yes, purple, like magenta. So bottom line is, me being a New York metrosexual, yes, I love magenta. Okay, sorry, just kidding. That line is a significant line, and that is known, you've heard me on the other videos, called the 150-day moving average. The 150-day moving average is a significant line used primarily by hedge funds and stuff back in the days. When a stock stays above the 150-day moving average, it's good. When it's below the 150 average, it's not good. So if it kisses the 337 and breaks out, at that point, Dominic, you have a fair shot for 38. Got it?
I do.
Internals and everything are fine. They're moving, crossing over like that. The McClellan oscillator is doing a W pattern. See that?
I do.
And this one, which is the MACD, which shows the underlying kind of, it's a momentum indicator strength, is still not that strong. It is starting to get strong. So if it gets strong, then the stock will be up here in the 350, 360 range. But let's see what happens.
I have another question, Frank.
Of course.
We're on a year chart, right?
We are on a 1 year chart. You want to see a short-term chart?
But I'm saying, like, I'm getting confused of when to look at the year chart, when to look at the day chart, when to look at the monthly chart.
It's not easy. There's no easy answer to that.
Okay. I'm kind of all over.
Okay, no, you're not all over. You're fine. I do the same thing because, the thing is, if you want some quick profits or build your confidence, learn the skills, then look at the 1 hour charts. Okay. Now, this is Thinkorswim. I use Netflix. I primarily trade Netflix. For the bigger picture, I look at this, but I primarily trade Netflix within levels, and that is the quad charts, the ones with the black background.
Right.
If you go to the Twitter feed, you'll see it. Those are significant. They are my trading charts. Thinkorswim are not necessarily my trading charts. They are sort of keep me focused. You know what I'm saying?
I do.
But you can. I'm going to send you the link. Do a free trial with them. If it works for you, it's fantastic. It's just unbelievable. So I trade Netflix off those patterns based on short-term picture, for example. But let's see what this can offer us. Now, before I go further, I'm going to answer your question. I'm going to give the platform to Serge. Serge, take over. What's your question, sir? And this is a beautiful company, by the way, on your left here, called CrowdStrike. Really excites me, not only because they are a disruptor in the cybersecurity business. They just this is unbelievable chart. Go ahead, Serge.
Yes.
Yes, I'm just saying. I'm giving you the platform to ask any questions and something you want to look at, and I can explain.
Do you stay when you swing trade? Do you stay long despite the market conditions?
Yes. If the market it's a very good question. Generally, with the market where the SPYs, which were up almost 200% from the lows on Friday, that I asked people to buy. When I'm seeing movements like this is obviously this is the channel on the SPY, going back to the world is ending crash on December 24th, what we call the Christmas Eve massacre. So this is your chart on the SPY, right? So the SPY right now, like I said before, was going to attack the 50-day moving average. So if I understand your question correctly, do I tend to remain long as the general directional flow is higher? Is that your question?
No.
Okay, go ahead.
Do you care about the market conditions or only on the stock?
On what stock? Like any stock you're talking about?
Any stock? I mean.
Yeah, take your time.
About the technical.
When I'm looking at the technical pattern, am I taking into consideration background market conditions? Is that your question?
Exactly.
Of course. It doesn't matter. I mean, it does matter how great a technical chart looks. I will always take into consideration what is happening in the background, because I know, and you all know too, that the most beautiful setup in the market can turn blood ugly because market conditions are super volatile. So yes, I certainly take that into account. However, when and this is the worst part about trading or these type of markets, is the manic depressive nature. Like one day the world is fantastic and the next day we are all blowing up, like, you know, Armageddon, end of the world. So that type of stuff tends to be absolutely crazy. So patterns also on a short-term basis tend to change. And case in point is this: the world is ending because the ISM numbers, manufacturing numbers, were ugly. Okay. Next day, something else, boom, another lower number. Third day, we got the jobs data. Market actually opened lower and then turned. So yes, market conditions are very important. So given we are in that swing condition right now, where I believe the market can go to about 297, which is the midpoint of the Bollinger Band. I'm sorry, this is the 20-day moving average. It's always in blue. So we have a little bit more room to move, couple of hundred points before the market gets hit again. And there's a downtrend line here, obviously. So bottom line is that I will remain long one with the other, and my technical charts will stay biased. As you know very well by now, Serge, this is a significant crossover of the full stochastics. This has to be respected, has to be respected. I'm not saying we're going to the high. We're not taking out 3,000, you know, on a 300 on the SPYs. All I'm simply saying is we have room to move given the force of these candles, that we generally tend to have a third day follow-up. Here we had a second day follow-up, and this is something we have to watch out for. This was 3 days, 1, 2, 3. This is 2 days so far, green candles. On the third day, market looks like it's going to break out, and guess what happens? A 2-day crash comes in. You see what I'm saying? So even though everything's looking great, what if we entered this zone that we, like the month of August, where the markets basically went up and down 600 points? See that?
Yes.
And then as you know very well, because you attend the sessions and all that stuff on my webinars, that I said it was going to break out, and it broke out like a monster over these red lines, which is the 50-day moving average. Then we lost the 50-day moving average again for reasons I don't think were for real, but hey, that's the market. There were other factors too. And now we are reclaiming back the 50-day moving average. And if we reclaim it back in a significant way, then the market can go towards 300, 3,000. But the 50-day moving average becomes a formidable resistance. But this is positive. Really like that. There are many factors which are positive, just showing you the basic ones. This is positive. The McClellan oscillator, all of them turning. And now what we don't have is the MACD. This needs to turn. So next question, Serge. Anything that comes to your mind?
Could you show me the stock AIMT?
Yes, AIMT is a special situation. It is not your standard charts and stuff. AIMT is revolutionizing that peanut allergy and the nut allergy, which is a multi-billion-dollar business. So AIMT is not going to follow regular conditions. AIMT was quite disappointing. The last time I made money on the actual first round, second round, I lost a bit of money. But I had stock too, so I had sold that, made a couple of points on that. The stock was supposed to go past 30 on that first initial approval. You remember that, right?
Yep.
However, the stock hit after hours, the 27 level, but then continued to pull back. If you ask me why, I have no idea. These hedge funds play games. So the way I look at AIMT, I will remain. I buy those cheap calls, I sit with it. I roll them over next month. I truly believe the company is either a buyout candidate because of their specialized thing, and I also believe the final FDA approval is coming very soon. On top of that, very renowned analyst, Piper Jaffray, and who's the other one? Robinson Humphrey, I believe that the stock should be a $60 stock. So this is really not a technical play. It is a range play. The options are cheap. I have no problem holding it. So this is the range that the stock is primarily trading in, which is around 21 and 26. Now, something else is going on here. This is a daily chart. Is that the moving averages seem to be pointing higher, which is a good sign. Technicals are fine. This is fine. So that's all good. So it's really a range play. Upper end of the range is 26, 27. Bottom end of the range supports at around 21 and even 22. Let's take a look at the weekly. The weekly chart is a little bit more exciting. The weekly chart is telling me that this wide range, which just goes all the way back to 2009, February of 2019, the stock basically has always done this.
W.
It's, yeah, kind of, just basically, I call it channel surfing. This is very positive. This is a weekly chart. Look at this absolutely beautiful green bar signifying big buying. See that?
Yep.
That's very positive. And so that's basically it. There is some funds are accumulating this stock. They bought a crap load of that stock when it pulled back from 27 all the way down to 20, 21. All right, next question.
I don't have another question.
Thank you, Serge, for your great question. So coming back to Dom and Jen, we covered Netflix, we covered Google. These are very critical because they are encompassing a thing. Now, one question I haven't answered for Dominic. Are you still there, Dominic?
Still here.
Yeah, I thought you maybe got sucked into the leaf blower, but okay, one second. I gotta save you. Netflix Weekly is really good, man. Oh man, if these guys kill, then Kramer's gonna be eating his words. This guy is such a newsmaker. He has a lot of good stuff too. He goes, "Get Netflix out of the fangs." Did you read that article?
And
the stock goes up like and they try to spread. Remember, the market's very manipulated. Always. Don't think the market's a fair place. And why should it be fair? If you're not going to fight the market and win, why should the market be your sugar daddy or sugar mommy and give you money all the time? No, it doesn't work like that. Okay. So the bottom line is that this is a macro falling wedge on the week. We have a minor crossover about to happen on the full stochastic. This is serious stuff. So all those idiots who are like, "Oh, Netflix is going to completely go down," I still think worst case scenario 230. I'll buy the crap out of it. And if not, we'll be selling it around 3 or 4. We have already established those numbers. Now, you're talking about short-term trades, right, Dominic?
I am, yeah.
Okay, good. So like I said, I primarily use the quad system, but let me show you on this system what the story is. These lines and stuff are those falling wedges, but now that we have zoomed in, I'm not removing the lines. You got it? So don't ignore these lines.
Okay.
So pretty simply, this is your hourly chart. What is this pattern called? This was back on Tuesday. This was back a week from last Tuesday. What is this pattern?
Head and shoulders?
Yes, it's not a head and shoulders, my friend. It's an inverse head and shoulders. A head and shoulder is when a hammer falls on your head. Okay? Your shoulders droop. That's a head and shoulders. A head and shoulders looks like this. It's almost like flipping the birdie. And then
that's a bearish, no?
That's bearish.
Okay.
Because you can see that. A head, left shoulder, right shoulder. And there's a neckline, which is a support.
Okay.
And when it breaks, yeah, head and shoulders are bearish. Now, in the old days, these were slow-moving patterns. You could always get in, short the market. Nowadays, they happen instantaneously. Got it?
I do.
In broader pictures, like if I expand this chart to a year, 2 years, 3 years, then you can see these patterns. But hey, like I said, I ain't a billionaire fund manager, so I don't really care what happens in 2 years. You got it? So I want to know, just like your question is, what happens in a couple of hours? What happens in a couple of days? That's really my concern. So, or what happens in a couple of weeks, depending on the chart. So this is just the reverse, and it looks like this. Jen, are you listening?
Yes, I'm here.
Good. I'm here is not the answer. You know what your answer should be. I asked you, were you listening?
Of course.
Exactly. Yes. Because when I ask you, are you listening, and you understanding all this stuff, it's not like you're here. You could be here in La La Land thinking about other stuff. So, half kidding, but you know what I'm talking about, right?
I know.
Most traders, I'm not talking about you, most traders are always there. How come they're not there? Because the mind is not there. They don't understand what the hell's going on. Okay, so this is a inverse head and shoulder, bullish. So basically, you have so you understand it's just a mirror image of the head and shoulders. Got it?
I do.
All right. So what is this? That's an inverse head and shoulder. This is the head. These are the left shoulders. This is your neckline. Do you see how closely it resembles this pattern?
I do.
Correct. Now, in between, and this encompasses almost 2 weeks since Netflix was at $2.95. So Tuesday to Tuesday, Wednesday to Wednesday is 1 week, 2 weeks, right? So in between, if you're a short-term trader, nothing wrong with that, given this frigging crazy market, is there were more head and shoulders to play with. So you want to be buying these levels here and selling. And when Netflix moves, it moves. I mean, it goes from about here. This was as recently as Thursday when the market turned. The stock was 257. The stock went to 273. That's 16 points. That's a lot. So now, given that that's the neckline, it is what, Dominic? It's the neckline is the resistance, right? It's like a wall.
Yes. Yes.
So if it breaks out, it's going to break out. It could break out before earnings. I think it will. If it breaks out too much before earnings, you don't want to be in the stock because that means they're going to drop it. Just letting you know. So what is the next level as a short-term trader would you be looking at? This is a 1 hour chart. Very useful for short-term traders. So we have identified what the patterns are and stuff. And Netflix is also very market dependent. Market dependent, and Serge, you have to keep this in mind. There's some very powerful analysts on Netflix. So one can come up with a good call, one could come up with a bad call. The stock will drop automatically in the morning. You understood? So
I do.
it is a very fast moving stock. So when you look at the bigger picture, what is this pattern? This is a bigger picture going back 2 weeks. We've already identified the pattern, so I'm not going to look for answers here. This is the inverse head and shoulder. Where is the big inverse head and shoulder? And where is the neckline?
272.97.
No, that's your first. That's your first IHS, which is inverse head and shoulder. Okay. The next big one is this one.
Okay.
Which is the neckline. That's 295. You're talking another 20 points. In between, this is the way I trade. And you can trade up Thinkorswim. Obviously, there's so many thousands, hundreds of thousands of traders trading up this. You look at each of the levels that Netflix broke down from. You draw a line there, Dominic, and that's your next level of resistance. Do you understand?
I do.
That's it. Look, one. You see, this is glaring, right? So this is where they just dropped the stock. Market conditions, whatever it was. Boom. So that is your next level of major support. 283. Sorry, next level of major resistance. So if you're a short-term trader and you see the stock basically go towards 280, Netflix and all these stocks also trade round numbers. Remember the old days, they always talk about round numbers. If a stock goes to 80, it's going to go to 100. If a stock goes to 30, it normally will go to an even round number. It's the same thing. So the next level of resistance psychologically is 280. Technical resistance is 285. Why? Because that's exactly where many investors got trapped, and maybe they're sitting around, never buying, didn't buy the lows, and if they go back to 285, they're break even on their money. They're like, thank God, I got all my money back. Let me get out. Got it?
Got it.
That's why it's called a resistance. Now, where is the next one? Jen, you have control over the mouse. I'm going to ask you,
Sure.
where is? Yeah, exactly.
Well,
Where's the next one? There you go. And then the final
Yep.
one, in my opinion, is a round figure of 300.
Right.
Yeah, exactly. So short term, if you want to trade the 15-minute chart. or the 1 hour chart. Netflix is a very, very fast moving stock unless you're watching the screen very closely, because with Netflix, you can make 30, 40, 50% of your money in 5 minutes when the stock breaks out. You know that. There will be rumors galore. They tried to spread a vicious rumor that Netflix was banned from Disney, meaning like, they Netflix ads. Nobody confirmed it. And then comes another positive mention that Netflix international subscriber growth was higher. The stock just turns around and explodes and goes higher. So it is unfortunate that this type of vicious rumor mongering still goes on in the stock markets, and they're not able to stop it. Got it? So it's like rumors that hit the market all the time from other sources. So this is what happened at 10:15. The stock was doing very nicely. This was the low on Thursday. Obviously, the ultimate buy point. Stock went up, still going higher. Vicious rumor, fake news, whatever it is, hits the market that Disney was banning Netflix ads. Well, who cares? I think the Netflix even cares about Disney. They're totally two different things, But the market likes to say, oh, they're big competition. Bullshit. Netflix is a completely different story, and Disney is a completely different story. You can have Netflix and Disney streaming if you have kids in the house and stuff, right? So where's the competition? I don't get it. They're two different ball games. So anyway, then this rumor mongering, and the stock drops immediately from around 272 to 267. Markets also pull back on that news, text it, but then in the huge surge. So the big spike on the news that Netflix's subscriber growth was higher internationally generated the stock to move from 267 to 275, $6 in 30 minutes. You can make money off that and say, okay, done for the day for trading.
So Frank, this is a 15-minute chart, right?
Sure.
So is it still positive that this stock is trading above the 34 and 50? Yes? Even though it's short term?
Absolutely.
Okay.
Absolutely. And the general direction of the stock, I mean, I just drawing quick patterns here. What is this pattern called?
Ascending triangle?
No, bullshit.
Ascending wedge?
Yes. It's a rising wedge or
rising wedge.
Yes. They call it, yeah, exactly. Okay. Ascending triangle is where the top is flat and it's like
okay. Gotcha.
Exactly. This is
rising wedge.
Yeah, rising wedge. So rising wedge do two things. On a powerful stock, which wants to break out, it'll break out. And that's when you're going to hit that 280 mark. Got it? But generally speaking also, and you want to look for an entry point because you're out of it, right now?
I am. I'm out of it.
Okay, so this could be very advantageous to you. A rising wedge, generally speaking, does what? Serge knows the answer. Serge?
Could you repeat,
generally speaking, a rising wedge pattern where a stock is oh, come on. I need to draw it more like a rising wedge. Generally, what does it normally do? If you don't know the answer, just say I don't know.
It's a bearish.
Don't guess. You don't know the answer. Here's the answer. A rising wedge, when it goes higher, generally tends to have a quick profit-taking program, and it looks like this. It's known as a bull flag. I've explained this almost hundreds of times on my webinars and ACS sessions. Maybe you did know the answer, you just didn't know how to answer it. So bottom line is, that happens to a lot of us, right? We know the answer, but we don't know how to answer it. So yes, the rising wedge very quickly can fall back. So if Netflix is down 2, 3, 4 points and still within this uptrend, and within, like you correctly pointed out, Dominic, on the rising red line, which can be used for short-term durations also, the 50 SMA on the hourly, you want to be buying the stock at that level. Got it?
Okay, I got it.
Exactly. Remember, I call this a galloping horse pattern. Remember when you're little, you might have galloped on a wooden horse? Or maybe now you still do when you go to the carousel. I don't know. I haven't accepted. Okay? My son actually used to ride horses when he was little. Such cute pictures. Oh, my God. Huge, these Arabian Mustangs and stuff when we used to live out near Princeton, and he used to be riding them in his gear. I'm like, oh my God, this is amazing. So this is a rising horse pattern. It's a galloping horse. This is the bull flag. So yes, rising wedges generally tend to pull back. Now, on a short-term basis, it can first move higher and then pull back. What we would like to see is a minor pullback so we can reload more, even though I still have at least have my position. Remember what I said, and this is where we're going to wrap up. Remember what I said repeatedly on Friday. When the market surged like that, you always want to take some partial or full profits on multiple big movers like SPY, like Google, like Micron, like whatever. You understand what I'm saying? So that's basically it. Last question to Dr. Martin.
No, Frank, I understood everything.
Good. So if you have to
don't have anything that pops out at me.
Okay, because if you had to think about a question, that means you don't have one. I'm glad that you understood. I will recommend to everybody else who's going to listen to this. I am willing to give a few hours of my time, which I give a lot. It's already 11 o'clock. Oh my God, I'm supposed to finish this with an hour. I want people to sign up for the advanced coaching sessions, the ACS. These webinars cost money. Not because you're just paying for my time, where in case I'd be charging you guys $150 an hour. That's what a normal coach would charge you if they were teaching you something, or a New York lawyer would charge you $600 an hour. I'm being dead serious here. My ACS sessions are basically the 5-pack sessions, which are on the website under members content, are dirt cheap. I think they come to $50 an hour or something like that. Half the cost goes towards running these sessions to go to webinar and all my costs involved with that. Okay, so sign up for that. It's not a marketing pitch. That's it. And the free ACS sessions here and there, I'll keep on doing them. But you guys got to get serious, and like they say in life, if you don't have a little skin in the game, you're not going to give a crap. So you got to have some, you got to sign up for the ACS session, spend a couple of bucks, really get into it, like most of you have done, and that should do it. Have a great afternoon, and I'll see you guys at 8:30. It's going to be very interesting what happens next week. And
awesome.
Yeah, thank you so much. Thank you so much. And
thanks, Frank.
Thank you all three, Serge, Dominic, and Jen, to asking these great questions and having me explain all this stuff as simply as possible so that everybody else who's going to hear it benefits.
Yep.
So thank all the other people who are going to be listening to this. Thanks, Serge, Jen, and Dominic, for taking my valuable time. I'm just kidding. On a Sunday morning, which is going to help hundreds of other people out there. So suggest that you guys thank them and sign up for the ACS sessions so that we can continue with these great training. Have a great morning. God bless you all.
Bye.